Is now finally the time to invest into crude oil again after its decline since the middle of this summer? This is what we're going to talk about, and welcome to myfinancesteacher.org, where, as you see, I make regular updates on precious metals, crude oil, energy, and other commodities, as well as the general stock market and cryptos. Today is the 24th of September, and this video will be first published to the members at myfinancesteacher.org, and I will make it public on my YouTube channel several days later. So what do I think on crude oil? Well, in a nutshell, if you want to condense this whole video in one sentence, I would say that there is a good chance that the crude oil has finished its intermediate cycle a couple of days ago. And yesterday was most likely the first day of a new cycle, which was likely your great buying opportunity. And as you see from this post, yesterday we did increase our energy positions substantially, and if memory serves correctly, right now the model portfolio has just around 16% in energy out of total 24% set aside for energy in general. The other 3/4 of the model portfolio I used for cryptos, precious metals, and the general stock market. And after considering the charts for this video, I think I would probably like to increase my allocation perhaps up to around 20% out of that total 25% set aside for energy. Now, looking back at the chart of crude oil, I often like to talk about the cycles because cycles are based on our human emotions, human psychology, which doesn't really change that much with the introduction of new technologies. Previously, I have made a video on why cycles are important in your trading and investment strategy. The link is in the description, so I highly recommend watching that later on. Coming back to the crude oil cycles, from my experience, they last somewhere around half a year. Often they last for slightly longer than half a year. The last two intermediate cycles actually lasted for less than that. The previous intermediate cycle was quite short and it finished only within 142 days. And if the ongoing intermediate cycle in crude oil that started earlier this year has actually finished, then it would have been going on for 152 days, with this slightly lower low on Monday versus the low on Friday. 152 days is slightly shorter than usual. Again, usually these cycles last for around half a year. For example, the cycle in late 2020 was slightly longer than usual at 196 days. Nevertheless, 152 is pretty close to an average duration of a cycle, meaning that I'm pretty happy increasing my positions in energy. What would make me even more happy and completely convinced that the new intermediate cycle in crude oil has actually started is if crude oil successfully breaks above this resistance zone that's somewhere around 66.6 and 67.8. Moving down to RSI, I like that RSI has marginally dipped into oversold area, going as low as 29.4 on Friday. So again, that could be enough for that intermediate cycle low. At the previous intermediate cycle low, RSI didn't even reach very close to oversold levels. And if you zoom out over the last few years, you'll see that outside of this anomalous negative $40 on the crude oil futures, RSI doesn't really stay at oversold levels for very long, and usually that is when a nice buying opportunity takes place. Another thing that I like on crude oil is that crude oil has poked several times already below relatively wide Bollinger Bands, which often indicate that trend reversal to the upside is quite likely. On the other hand, poking below narrow Bollinger Bands, as we saw at the beginning of this decline, and as I've mentioned in many of my previous videos, does not usually come as a sign of a trend reversal. And finally, another thing that I like over here on the daily chart is that on Monday, crude oil came pretty close to retesting the 200-day moving average, and we're bouncing from that 200-day moving average. So those are all good signs on the price chart. Let's move on to the chart of the Optimism index. And as you see from history, usually whenever optimism is relatively low, whenever everybody is pessimistic about the asset, that's when you want to increase your allocation. And that usually happens when this optimism index is relatively close, somewhere around the level of 30. Although the correction down into the previous intermediate cycle low in early 2021 was quite mild, and the optimism index only dropped down to the level just below 50 for that intermediate cycle low. A couple of days ago, the optimism index on crude oil did drop just below 50, and again, although historically you would really like to see this optimism index below 40, closer to 30, perhaps with the cycle 152 days long, kind of close enough to an average duration, there is a chance that that was the low a couple of days ago, and crude oil is ready to rally into the beginning of a new cycle. Although, of course, there is also a chance that crude oil continues the ongoing cycle, lasting closer to an average duration of half a year or so, and brings this optimism index a little bit lower towards that level of 40 or even lower than that, perhaps over the next several weeks. But I don't think that scenario of significantly lower oil prices is very likely. I would give it perhaps 35 to 40% chance, meaning that the scenario where crude oil is ready to rally into the new intermediate cycle gets somewhere around 60 to 65% chance from me. Next, looking at the crude oil seasonality. So what we see on seasonality is that August is usually a pretty good month for crude oil. And coming back to the price chart, if by the end of August, in the next 1 week or so, crude oil comes back to retesting this 50-day moving average, that would turn August from a red declining month right now to close to a zero price change for August. And September, as you see, is also usually a positive month for crude oil. This does actually match our expectation for a new intermediate cycle in crude oil. However, as you see, October and November are usually pretty bad for crude oil. That actually plays more into the 35% chance scenario where crude oil continues the ongoing decline over the next several weeks, perhaps giving us an intermediate cycle closer to its average duration of slightly longer than half a year. And that's when perhaps we might see a negative September on crude oil price. It is quite likely, but although not very likely in my opinion, but nevertheless, this is what seasonality shows us. Next, let's move on to the energy company's XLE. As you see from this squiggly dark red line, I was expecting XLE to come down since a couple of weeks ago. This is exactly what XLE has done so far, so let's delete this squiggly line, and we see that XLE is now back above the 200-day moving average and back above this support resistance zone that's been respected for quite a while, since middle of 2020. This support resistance zone is somewhere around 46.5 to 47.4. And interestingly enough, potentially we see this island reversal on XLE, where a couple of bottom days on XLE give us a gap on the way down, and at least so far an unfilled gap on the way up as well. Another positive sign on XLE is this positive divergence, where the price has given us a lower low over the last month or so, but the 14-day RSI is showing us a higher low. This is a positive divergence, which often also comes before a trend reversal to the upside. Next, let's move on to the optimism index on XLE, and generally this optimism index, the blue line, is quite volatile, jumping up and down all the time. So let's have this green line, solid green line of the 10-day moving average of this optimism index. What we see at the moment is that a month ago, this 10-day moving average of the optics was low enough for an intermediate cycle low. Since then, we've seen a lower low on the price and a higher low on this 10-day moving average, which is also showing us a bit of a positive divergence. Usually the intermediate cycle lows in crude oil are accompanied by significant lows in this 10 DMA, the green line. For example, late 2019, we see that 10 DMA is somewhere under 30. early 2020, of course, with a significant decline in crude oil prices and a strong drop in XLE. This green line 10 DMA is below 20. Another intermediate cycle low in crude oil in late 2020s, and this green line is somewhere around 20 again, with a bit of a positive divergence into the final intermediate cycle low. And as I mentioned, the previous intermediate cycle low in crude oil and XLE was relatively mild, and this green line only came to around the low 30s. So again, the conclusion from this chart is that while this 10 DMA green line is a little bit high at mid 30s or so, that means that perhaps there is a small chance, again perhaps around 35% chance, that we need to see a further decline into the intermediate cycle low to bring this 10 DMA closer to 20. But there is also a pretty good chance, I would say 60-65% chance, that the drop in this green line a month ago to under 20 is enough for the ongoing decline, and we are going to observe a positive divergence over here, pushing us into a rally of a new intermediate cycle. And lastly, I want to have a look at the relationship between crude oil prices on the horizontal axis and XLE on the vertical axis. These are monthly prices since January 2009. So that's over the last 12 or so years. And the only red dot over here in the middle of the screen is the month of August this year so far. So of course you would expect this relationship between crude oil prices and XLE to be positive. So generally we see an uptrend over here, and this solid black line in the middle of the chart shows this trend line. And whenever XLE is a little bit too high versus crude oil, you'd see the monthly blue dot far above this trend line. At the moment though, the red dot is far below this trend line. And there are not that many other months that are equally far below the black trend line. So what I would argue from here is that perhaps energy companies, XLE ETF in general, is quite undervalued versus what crude oil prices are showing. So even if crude oil was to continue into the intermediate cycle low for another few weeks before bouncing into the new intermediate cycle, I would still hold at least some positions in energy, as I think in the longer term, over the next couple of years or more, energy should do outstandingly well as vaccination rates improve all over the world, and we will finally see the economies opening up and coming back to something of a more normal business operations. So on that positive note, we finish this video. I wish you a productive Tuesday. Have a nice day. And if you wish me to have a nice day, I would really like you to hit that like button and share this video with your friend. If you help me to grow the channel, that would really make my day. Thank you and good luck in your trades.